Carl, thank you very much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. Surging stocks, new highs, draw even closer today. We're trading the markets with the investment committee. Joining me for the hour, Josh Brown, Jenny Harrington, Kevin Simpson, and Rob Sechin. We're off the best levels, but we still have a good day going. There's no doubt about that. Better than 1% on the Nas. We're about that on the S&P, and the Dow not far behind either. We did touch 6,000 on the S&P for the first time since February 24th, and we're just a few points below that now. Jobs report, the catalyst today. Unemployment holds at 4.2. 139K versus 129K was the estimate. Jenny, been a little more cautious than most. This market continues to run. It's running away from people who are cautious. What do you do?
I don't really see it as running. Do you? What are we up now? 1.5%, 2% on the whole year?
Well, if you judge it, why don't you judge it from the low? If you're going to make yourself feel better by saying, if you're going to try and make yourself feel better and say, well, we're only 2% up for the year, you're kind of missing the story, aren't you?
You know me. I take a longer term perspective.
Well, I know that, but this has been an incredible market.
It's a bounce. It's a bounce, not a run. Yeah, it's a bounce off that bottom that we saw in the beginning of April. I don't see it as a huge run because I don't think it can go a lot higher from here. You know, I think that we've got a lot of headwinds. I know there could be tailwinds too, but I think there's serious headwinds out there, and those headwinds come in the form of there's a lot of uncertainty. You know, when the president can squawk and drive a share price down 16% because of a fight, that's uncertainty in the market. That's uncertainty
in the market?
Yeah.
I'm talking about a single stock.
How can you be certain about the market when it's a single stock, it's indicative of a bigger problem?
I'm certain about the fact that the S&P is up 24% from the low.
Are you certain then that S&P earnings growth are going to come in at plus 14% this year?
Because I think they're going to come in better, and they already have better than most people thought they would.
But when you're trading at 22 times, that presumes a kind of perfect market setup ahead where you're going to hit every growth target, right? I don't see how that happens. Markets don't like uncertainty. We live in a world that's infused with uncertainty. I think there's, for me at least, I think there's uncomfortable complacency out there.
Okay.
Where everyone's just saying like, oh, sure, you know, taco. Oh, sure, the bromance will come back together. Right. Whatever it is. And I don't really like this market. Now, I want to caveat this with just because I'm not bullish and just because I don't see us running doesn't mean I think that we fall apart. I think that, to your point, corporate earnings were decent, and the consumer continues to spend. So there's a decent floor out there. But when we say run, like, I don't see it as a run. I just see it as this kind of like big volatility bouncing around total year.
24%. Don't call it a bounce, Rob. Don't call it a run. LL said don't call it a comeback.
2% for the year.
You pick whatever you want. What does it feel like to you? What does it feel like to you?
It feels like a Super Bowl, like when we were kids that bounced off the ground. I very rarely disagree with Jenny. Very rarely.
But I said bounced. I didn't say run. Okay, I agree with you on the bounce.
But on the pain trade is still higher, Jenny. There's no question about it. The market is fueled by haters. There are still tons of haters out there. I don't see any of these shows where people are coming on and pounding the table. The most bullish people are neutral, frankly. And by the way, one of the biggest bulls is Mike Wilson. What a shocker that is to me personally. And so he's a fundamentalist, and I think he's looking at positioning. And positioning is still wildly offsides. CTAs, systematic traders, are only 16% long right now. When you look at aggregate positioning, despite the fact that you have the fundamentalists that are a little longer, you look at aggregate positioning, it's in the 23rd percentile. We were in the 95th percentile coming into the year. So when you look at this and you look at the way people are positioning, and markets climb walls of worry, I think there's obviously a lot to worry about. Naturally, the things that you talk about, Jenny, valuations being where they are, it's a ceiling. And we're probably near that ceiling. I'd say the range that we're in is 6,150 to 5,400, but you're going to need something pretty powerful to knock us down to 5,400. Not saying it won't happen. Yeah. I don't think it's the bromance being over. I can tell you that.
There's tons. The little things is noise.
Yeah, I agree.
I want Josh's point of view on all this. Dubravko Lakos, JP Morgan, he raises his target today, just, I guess, reflecting this newfound optimism, Josh, that's in the market. Rob's right. I mean, a lot of institutionalists are cautious to negative. They're not sort of buying all in yet. But, I mean, this market continues to, you pick the word that you think fits best. Run, bounce. All I know is it continues to move higher.
Yeah, in early April, I was as pessimistic as everyone else. I looked at those tariff numbers that were on that cardboard, which was subsequently thrown out. But like when that looked like the new reality and we had no idea how quickly Trump was going to capitulate, the obvious thing to say was, all right, we're in for it. This is not going to be fun. The thing is, all of that was abandoned relatively quickly, and a couple of other things have happened on the way up that I think should give you faith that we don't have to revisit those levels, at least not this year. And here are those things. In April, the most important trend in the stock market was reaffirmed by the CEOs of the largest publicly traded companies. That AI spend, that CapEx expectation that the market had was ratified by Zuckerberg, by Sundar, by like one after another, Microsoft. They all came out and said, no, we don't care the NASDAQ's in a correction. We're all doing what we said we were going to do. And then the cherry on top was NVIDIA having another incredible report. That's important. You ask about earnings growth for this year. Well, where the hell do you think it's coming from? It's coming from that AI theme. So getting that sense that it's intact was really important to this rally. Jobs reports, we haven't had a bad one. Today included, 139,000 jobs added. Not as hot as the pace from 2024, where we averaged 168,000 per month, new jobs each month. Right now, we're at a run rate of 124,000. Not terrible, even if you consider the revision they just threw out for March. That has been important to the rally as well. You also have a situation where the Robinhood crowd, and by the way, Robinhood, new all-time high right now, they're buying every dip. They're buying quickly. They don't read the news. It doesn't land on them. They don't care about bromances or whatever we're talking about. When you look at fund flow data, whether it's Robinhood or Vanguard, look at the IBIT, the Bitcoin ETF, they're buying the risk. So long as you have that dynamic and everyone's working and there's $19 trillion in cash and bank accounts and money market funds, again, I don't think we need to revisit. I think we can build on some of the things that changed our minds and enabled us to look at this market as being constructive.
Give me Hood again, guys, please. 52-week high yesterday, just since Josh mentioned it. We'll talk about it for a moment. Barclays says it might go into the S&P 500. As a matter of fact, the price target goes to 81 from 72 at Goldman Sachs. We like to highlight for you stocks that are on the move as we're talking about them. It's up 2.5%. Kevin Simpson, you own it. Just give me a thought on that, and then I want your view overall about what you heard from the rest.
I mean, Robinhood has been one of our favorite stocks in the growth portfolio. You could have picked this up at $31, $32 in the lows on April, and here it is at $72. I agree with the upgrade to 82. I think it can go even higher. When you look at the statistics, the total platform assets have just surpassed $250 billion. This isn't a joke. This isn't a little thing that you trade crypto on your iPhone anymore. This is a legitimate company, and I think if you're in Wall Street, you should look out.
Feels like investors are bullish about that. Call from Barclays that it is a potential candidate for the S&P 500 inclusion, along with some other stocks. But as I said, target to 81 from 72 at GS. So I wanted to get that out of the way. What about what you've heard from the panel here? Where do you come down on this market? We're 2.5% or so away from highs, if that.
Yeah, I agree with Rob that the risk is to the upside, and I think that you want to enjoy the ride higher. I don't think I would chase it. So I agree with Jenny from the standpoint that there's been a tremendous run from the 24% bottom, and trees cannot always grow to the sky. But at the moment, the economic data continues to support a Fed rate cut later in the year. And I think that's what's fueling the market, not the headlines or the tweets, but the jobs report today gives enough of a pathway, another pathway, for the Fed to be able to be in a position at the end of the year to give you one, maybe even two rate cuts.
The president wants a full point.
No chance.
I know, he posted that today. Again, calling Powell late, the chair, and saying that they should cut by a full point. But you don't think that they're going to cut at some point this year? Baseline, they cut at least once?
Yes.
It's either all or nothing at all in our mind, right? You're either going to have data that indicates that they can do that. So far, we haven't seen that data.
Yep.
And if you get that data, we may all be a little worried about it because to me it would indicate a growth slowdown.
Yeah.
Or you're going to be in this type of environment where they're not giving the ammunition they need
to be able to cut.
I mentioned the president calling for a full point rate cut. It gives us the opportunity to pivot to what is the very latest in the political version, perhaps, of Hagler versus Hearns from way back in the day. Round one, greatest round in the history of prize fighting. I think everybody who's ever seen boxing would agree to that. We bring that up just because this captivated everybody yesterday. And there are some new developments. Eamon Javers is at the White House with some of the very latest. There's not so much of a back and forth, if any, like there was yesterday. But there is, as I said, a new development in all of this, Eamon.
Yeah, Scott, that's right. I mean, it was sort of like a prize fight yesterday, and it was, shocking, but maybe not unexpected. And what we know as of this morning is that, it's all quiet on the North Lawn here so far today. We haven't seen the big flare-ups throughout the day on social media, but we did get indication from the White House that the president intends to sell or give away that red Tesla that he bought at the, the sort of the peak of his hype cycle around Elon Musk. He went out on the South Lawn here at the White House and held what amounted to a Tesla commercial on the South Lawn, talking about how great the cars were, how he wanted to buy one himself, showing off a number of the different models, lamenting the fact that blue state liberals weren't buying Teslas anymore because of Elon's participation in the White House. Now the White House is letting folks know that the president intends to sell or get rid of that Tesla. I just looked over there on the driveway a short time ago on West Executive Drive. It is still parked there as of right now, and I can tell you that a number of the TV networks have live cameras pointed at that, watching to see when it might be moved away, Scott. We're above that sort of thing, so we don't have that. But, that's sort of what this relationship has gotten to. And I think, a couple things. One is you got to take this seriously, though, as weird as it is and fascinating as it is, because of the coalitions that it could fracture, right? Republicans on Capitol Hill concerned about debt. What does it mean for crypto, the crypto world, the crypto bros who are going to have to pick sides here? What does it mean for Silicon Valley and those folks who are going to have to pick sides here? J.D. Vance, the vice president, was forced to put out a tweet last night. He said, President Trump has done more than any person in my lifetime to earn the trust of the movement he leads. I'm proud to stand behind him. The vice president had to put that out because Elon Musk put out a tweet calling for President Trump to be impeached and for J.D. Vance to replace him. When your vice president has to put out a statement saying he's still with you, you know that lines are being drawn in the sand, and that's what's happening here at the White House, Scott.
Yeah, it just continues to be a fascinating story. Eamon, thank you. On the North Lawn of the White House, as always, Eamon Javers for us today. So the street has obviously weighed in, as you would expect, nothing less from Dan Ives. Time to make up and move forward. And Tom Lee, the sell-off in Tesla overdone. One of the worst days in a while, obviously, for that stock, which Barclays calls may have preempted a potential sell the news event on the company's robo-taxi event on the 12th. That's an interesting perspective. Does raise the degree of near-term uncertainty, says TD Cowen. And Wolf, like the rest of us, hard to know how all this ends. But until it does, we'd expect the stock to remain under pressure. Goldman takes the target to 285 from 295. Not a big move, but nonetheless, it is something. And Kevin Simpson has trimmed his Tesla position as of yesterday afternoon amidst the drama as well. What's your thought process through all this, Mr. Shareholder?
It's my job to navigate volatility and uncertainty, and yesterday was something I'd never seen before in my life from an optics perspective. And thinking about the entire Elon Musk ecosystem, they're not in as good a position today as they were 48 hours ago. However the stock trades, whatever handshakes might happen, when you're dependent upon the government to the extent that they are, I looked at it as a very risky scenario. So it's my job to hedge. We took the position from 3% to 2% as this was happening. Then we went in wherever we could, and we wrote covered calls on 60% of the portfolio. And I wrote calls at $270 for $25 premium, which is essentially getting out at $295, a little bit below where it's probably trading right now. And this expires next Friday. And if we're out at 300, there's plenty of other stocks that we can look at. I don't need to be a part of this drama.
I mean, Bryn, talking to owns the stock, she's like, well, this means the stock could trade maybe 250 250-ish, 260. She was sort of hesitant to think that it was time to get back in on that big dip yesterday.
I watched you. I thought she did a great job. I agreed with that baseline. I just wanted to be out of the name. We still have a small percent, essentially what would equate to a 1% position.
Yeah.
I hope it works. I hope everyone makes up and the stock does better because I love the full self-driving Teslas. But I'm paid to manage money, not hope for an outcome.
Yeah, we missed having Josh on the program yesterday on his usual Thursday slot because it really would have been great to have your perspective. Do you have one today now that you've taken it all in?
Oh, man. I was at a funeral yesterday. That's the only thing that could keep me away, Scott. Yeah, my perspective is the drama on Twitter is hilarious, of course. Everyone's having a great time. But I think the real story here is the investor base in Tesla literally doesn't care about anything. This is still a nothing matters stock. It's 120 times earnings. They are losing market share in every key EV market around the world. There's not one that they're gaining or holding market share. And they're not just losing a little, it's plunging. Other companies are selling EVs at a faster pace, and Tesla is selling less. They're literally selling in like the 4-digit, like a few thousand Teslas in some of the biggest automotive markets in Europe and obviously in the United States. That's becoming a bigger problem as well. China, tons of competition. The stock market, though, has voted. And the vote is this is now a robot and automation stock with a sprinkle of AI. It has nothing to do with car sales. The car sales are only important insofar as they get us to the robotaxi, which is the next trillion-dollar idea. Fine, sure. I don't believe that, but that's what the market believes. And I think it's just incredible how faithful this shareholder base is. I wouldn't bet against it. And the sell-off might be overdone. Dan Ives and Tom Lee might be right. It's not my bet, but time and again, that's been proven. The stock is already in a 30% drawdown year to date. Keep in mind, it's lost $290 billion in market cap since New Year's Eve, and it's still a $900 billion situation. So I wouldn't bet against the shareholders buying the dip here and coming right back in.
People kind of say the same thing about Apple over the years. Don't bet against it no matter what happens in the near term with that stock. We're watching those shares, excuse me, obviously with WWDC looming large next week. We'll be there live, as we've told you a million times, when we're sitting next to each other at Apple Park. That's Steve Kovac. Microsoft today, new record high, worth mentioning. And by the way, overtaking NVIDIA as the world's most valuable company once again. 6 straight days up, longest winning streak since December 24. It's up more than 30% since the lowest 2025 close on April 8th. It's been a great comeback, Kevin Simpson.
Yeah, I'm surprised at how great it's been, to be honest with you. I know that the Azure cloud growth was better than AWS, and the investments that they've made in OpenAI are probably starting to pan out. But I haven't been using any of the AI within the ecosystem of the Office products yet. And I think once they can really turn that on, it can be a game changer. We're talking about Apple being an AI story. Maybe that's another year away, but I think Microsoft is a heck of a lot closer.
You bought Meta. You bought more Meta. Why'd you do that here?
Well, we bought it at 644 the other day, and it's almost 700, so I don't mind bragging about it. But really, we rotated into this over the past 3 months.
Humble brag.
Once in a while. We still own 1% of Tesla. The idea here is that the advertising that they're doing with AI is incredible. And if there's not a recession, and we don't think that's our base case, we think they can continue to just improve margins, maybe one of the cheapest big tech names, share buybacks, dividend growth, and low multiple.
And before we take a break, Josh, Amazon today reiterated overweight Morgan Stanley. They call it an underappreciated Gen AI winner. Reiterated by as well B of A.
Yeah, for me, this is the best of the Mag 7 for this year. I think it's pretty competitive on returns so far. I've been saying it all year, and I think in the second half, Amazon has more levers to pull to surprise people with some of the things that they're working on that no one's even really talking about much, like robots is a really good example, delivery, et cetera. So I remain long. It's one of my bigger positions, and I'm not going anywhere.
All right, quick break. An AI wolf in sheep's clothing. That's what Josh Brown says about the stock he just added to his best stocks in the market. Which one is that?
So we wrote up Deere yesterday, which is on the list, and I still think has upside potential as one of the better setups that I'm seeing, even though the stock has already been a big winner. The company is expecting 18% earnings per share growth in the next year, right now selling at 25 times trailing, but a 23 forward PE. The important thing here is very simple. From a risk management perspective, the buyers have been respecting that rising 200-day moving average all year. They come in routinely, they buy it. Even during the worst of this market in early April, you could see it only spent 3 days below that level, and the buyers came in and bought it. The main reason here that level has been such an important support, that trend line, is because tariffs are not really a big issue for Deere, and that was what a lot of the bears expected earlier on. It turns out 76% of Deere's components are sourced within the United States, 79% of its completed goods in the United States. So there'll be some issue from tariffs, but very minor. They learned their lesson from the 2018 experience, like a lot of American industrials have. So I like the stock here. It is up a little bit from where we wrote about it on CNBC Pro yesterday. The AI angle here is very simple. They're basically taking what used to be a very cyclical, heavy machinery-oriented business, like tractors and farm equipment, and they're turning it into a subscription model. They're turning it into an ARR business, much like we saw with Spotify, with Netflix. These are the hottest stocks in the market. Uber has Uber One, Robinhood has Robinhood Gold. All of these companies that have gone from selling products and equipment to selling subscription and having an ARR revenue model have seen a re-rating in their multiple. That's what's going on with Deere. Their public target is that they'll get to 10% ARR by 2030. If they can do that, that's $5 billion out of $50 billion in annual revenue. And I think they deserve the higher multiple the stock is currently garnering. So I like it here as the best stock in the market. I'm not long it yet. I may go long this name at some point soon.
Yeah, well, Melius today agrees, agrees that it has big upside. They upgraded it to buy, 2-year price target to 750. Again, a 2-year outlook, but 750. Josh, thanks. Josh, what's your final?
Amazon's breaking out here at 211, no resistance until 240. I like it.
All right.
Hello, welcome to Blue Cloud Trading. My name is George. It's Friday, it's June 6th, and it's after the close. We just saw some clips from the halftime report earlier today. Josh Brown and guests sharing their stock picks. They talked about Tesla. They talked about Deere. We're going to look at those stocks. We're going to also take a look at some of the Mag 7 stocks like NVIDIA, Tesla. Tesla down 14.81%. That's for the 1 week performance, by the way. Let me just switch it over to 1 day. It was actually up today a little bit. Okay, so up 3.67%. Here's the daily, Friday's action, and the only one that was, or the one that was down the most here, Broadcom, down 5%. So we'll look at the heat map. We're going to look at the indices, and we're also going to take a look at. Let me just show you guys these ETFs right here, the index ETFs. We're going to look at Deere, Robinhood, and the Mag 7, and some of the sectors. So let's get started. Dow Jones up 1.05% today. NASDAQ was up 1.2%. S&P 500 was up 1.03%. And the Russell 2000 was up 1.62%. Heat map, as you can see here, looking pretty bullish for the majority of the stocks. Walmart was down. You can see Home Depot and Lowe's were down as well. Netflix was down 0.72. Pepsi was down. And just, but the majority of the stocks were up. Now, this is the 1 week performance. Let me switch it back again. So you can see how the stocks did for the week. Consumer defensives were down a little bit, but Tesla was down the most, 14.81%, a big drop. And if we look at GM for the week, was also down 4.3% out of the car stocks. Palantir was down, Berkshire. Anyway, I'm going to go through these very briefly. Here's a daily chart. The Dow Jones, it is still stalling at that 428.65 level. Now, it gapped up. It did have a nice little gap up from yesterday, from Thursday, but it did create a reversal candle, a spinning top when it reached that high. So just keep that in mind, folks. FEZ, the Euro Stocks 50 ETF, up just 0.35%. Not a bad looking chart. I like FEZ. IEV is the Europe 350 index, also still in a nice strong uptrend, up 0.33%. Russell 2000 did in fact break through that prior high right there, and it gapped up. Now the problem with the Russell 2000, however, is the fact that the 200-day is lingering right there. It's approximately 1.7% away. So a lot of times when price reaches that prior 200, you'll see a stalling, and then maybe a reversal. I'll give you an example. Like right here, price dropped, closed under the 200-day, dropped a few more days, right? Came back up to it on that candle right there. You'll see the wick. Let me just make it a little bigger. See that little wick right there, right? Touched it and then dropped, and then you can see that big drop that occurred right there. Now, when price is above the 200-day moving average, a lot of times you'll find that support right there, and it will bounce, okay? So like right there as well, and right there, over here. And once it drops under, expect to find a little bit of resistance like you do right there. You see that those multiple days right there where price got stuck right under the 200. So that's what I'm expecting for the Russell. Plus, it doesn't look that particularly great on the weekly chart. If we looked at the weekly chart, price is still under the Ichimoku cloud. We're using the Ichimoku indicator here, Japanese indicator. When price is under the cloud, it's a bearish place to be. If we're getting close to 540.81 level, we're just about 2% away from our target. S&P 500, the SPY ETF is still moving up. It looks like it also broke through this little prior high right there, which is nice. That happened actually today, all right, because you can see it was closing on that line before that, and so we have a nice little pop-up here. Let's take a look at the VIX. VIX still dropping, down 9.25%. That's a good sign for the market when the VIX is dropping. All right, let's take a look at Deere. I actually wanted to, even though this is one of the stocks that I hold in my portfolio since Josh Brown brought it up today, I thought I'd bring it up because it actually came up on my scanner yesterday, the Blue Cloud scanner that I share the results of with members. And if you want to become a member, there's a join button on my homepage right next to the subscribe button. Click on that and become either a Blue Cloud trader or Blue Cloud Legend level member. I'll show you guys how to do that at the end. But right now, as you can see here, price had pulled back, popped above the Tenkan-sen. I added the position here yesterday on June 5th. And yeah, it popped a little more, up 1.81%. Here's what the only types of results that come up on that scanner are going to be, perfect sort of setups where the price is very bullish on the weekly and also very strong new buy signal on the daily. It doesn't necessarily mean it's going to always materialize into a very strong uptrend, but the majority of cases it does, and there's a higher probability ratio with those types of stocks that pop up on the scanner. Here's Robinhood. This one here, I had a position in this one back here on January 16th. I closed out of it on February 6th for an 18.7% profit. Now, this one here, it just broke through this week, folks, on the weekly chart. Robinhood broke through 66.91. Here's the daily time frame. You can see it all started happening right there on June 2nd, Monday, June 2nd, and it's continued to move up. Now, how much did it move up since that breakout? 12%. Okay, let's look at Mag 7. Microsoft broke through the monthly level of 468.35. If I switch it to a monthly chart, okay, here's Microsoft going back many, many years. It reached its height back on July 31st of 2024. That level of 468.35 has now been broken officially today. Okay, so now Microsoft is hitting all-time highs. And here's the weekly chart. You can see it clearly right there. And the daily. Now, I don't like this candle but it did in fact break and close above. In fact, it gapped above that level. So I kind of like that, the fact that it gapped above that level. All right. NVIDIA stalling at 143.44. That goes back to this little candle. I'll just circle it so you can see right there. Okay, that's back on, let's see here, February 18th, 2025. So last year. And that's where we're at now. Price just keeps on stalling at that level. If it breaks out, I think it's got potential. There is a little bit of there's another little high right there of around 148, so that will probably be the next level. It's about 5% away, and then if it can get through that, then 152.89 for a total of 7.6% potential move if it breaks 143.44. Google looking good here, broke through the 200-day moving average. In fact, I like this pattern here. This here is called a bullish kicker. Bullish kicker. These two candles right here. So basically, you see yesterday, there was the opening price. It closed here. Today, this morning, gaps up, right? And then continues moving up. I'll show you guys what that looks like here on the candlestick sheet that we use. Let's see here. Okay, so it would fall under double candle pattern, under the bullish. All right. It's the first one on the left, bullish kicker. So you can see that, there's that red candle, and the very next day it gaps up above it and then continues moving up, right? And that's exactly what happened here. So bearish candle, gaps up above, right? Above the opening price right there, and continued moving up. So I think there's some potential with Google. I do. On the weekly chart, it's also showed a lot of strength in recent weeks. The only thing, and it even stayed above the Ichimoku cloud for a second week in a row. The only concern I have is the Kijun-sen is right there on the weekly chart. That's why I'm not like gung ho about Google quite yet. And the future cloud is also bearish. I like the company. I like the fact that it's held up this prior low right here. But I want to see a little bit more strength here. Here's Tesla on the weekly chart, stalling as it pulled back. As you can see right there, it stalled right at the cloud and the Tenkan-sen. So last week, I warned about this candle, the gravestone doji. If you go to Friday's video, you'll probably see that one. And look what happened. It basically led to this drop. Now, that candle itself didn't do it, but this is a warning that some bad things might be happening. The price movement is going to show us what's happening in real time, and I think that's an interesting thing. Now, the news, of course, is what caused this, right? This during the week. So here, let's look at the daily chart, and you can see though back on Friday, May 30th, it closed under the Tenkan-sen. So that was the first signal right there that things were starting to fall apart, and then it just from that point it dropped, as you can see right there. And right now we have a bullish harami, but it's a negative little candle right there. I don't like this. It's under the 200-day moving average. This is not very bullish in my view. Okay, we do have a bullish cloud on the daily time frame, but on the weekly chart, remember, it's still looking quite bearish. Right, we've got price under the Kijun-sen, the 26 period. We've got a bearish cloud, right? And the Chiku span, the white line there, is under the candle. All right, let's keep going. Amazon, here it is on the weekly chart, popping through. On the daily chart, looks pretty good. I like Amazon overall, but again, it's not perfect on the weekly chart. There's you got a slightly bearish cloud, but that could easily just change direction over a week or two. So I think that the Amazon is looking more and more bullish to me. I don't like the fact that we have that faster moving average under the slow one, though. Apple is under the 200. I'm sorry, it's above the 200-day, but it's under the cloud. So it's not in a good place right here on the weekly chart. And here's the daily. It's stuck inside the cloud. Meta on the daily chart looks pretty bullish. It broke through that 688.65 level today, but it did it with a spinning top, which is a reversal candle. On the weekly chart, it's looking pretty bullish here. and Tenkan-sen is moving up. ADX is moving up. Green line is above the red line. So I'm starting to like Meta more and more, but not everything is perfect here. Okay. And you'll see that the single span A crossed above the single span B. All right. And as far as the sectors go, I'm just going to go over the top ones up here. GDX on the weekly chart gave us a big shooting star, which is a little bit concerning. It was down 2.88%. That's the weekly. Here's the daily, getting under the Tenkan-sen. We might see it pull back a little bit going into early next week. So just watch out with the gold miners and gold stocks in general. Financials. I wouldn't be adding positions, basically, is what I'm saying, until things start to become a little bit more clear on gold. Right now, we're in a very strong established uptrend. Like I said before, Tenkan-sen is above the Kijun-sen, price is above the cloud, the Chiku span is above price on the daily, and also when we look at it on the weekly chart, we've got all the right elements of the Ichimoku correct, but this 1 week is concerning. I don't like these candles. These are really dangerous type candles. XLF up 1.24% today. Not a whole lot of going on here with it. It looks like the next target level is about 1.7% away at 52.26. Industrials broke through this little channel, okay, or consolidation zone. It got above the 144.51 level, which is that prior high. I think there's some potential for industrials now on the daily. On the weekly chart, cloud is starting to look slightly more bullish. Tenkan-sen and Kijun-sen are merging. It's all looking good. Chiku span is above price. Yeah, I like industrials. XLI, XLP on the weekly chart, kind of stalling over here. On the daily chart, doesn't look that great either. I don't like what I'm seeing with consumer staples. Bitcoin. See, when you see a chart that's this messy, where price is going up and down and all over the Ichimoku, and you see the Ichimoku changing course multiple times, going from a negative cloud to a bullish cloud to a negative cloud to a bullish cloud to okay, that's when you know that you really shouldn't be thinking about adding a position here, because it's basically in limbo right now, consumer staples. Overall, like the chart is technically correct as far as Tenkan-sen being above the Kijun-sen, prices above the 200. You get the cloud is bullish in the future here on the daily, and the same thing on the weekly for the most part, except for the cloud being slightly bearish. But yeah, I don't know. I think I'm gonna take this one off the list here. It's not something I want to be watching. Doesn't make any sense to. Bitcoin, US dollar, still finding that resistance here. It's pulled back a little bit this week. You can see that. But we did get a nice bullish candle here, a bullish harami on the Bitcoin US dollar pair. What about IBIT? Because I want to see that one. That one, yeah, same situation, up 2.4%. This is the ETF for Bitcoin. So there's a good chance we might see a pop up here next week in IBIT. Let's see. I skipped a couple of these. XLC Communication Services. Nice, strong uptrend. I like this one. Also broke through. It broke through this little high. Okay, that happened on Thursday. You can see it moving up. Utilities. Stalling. This is a weekly chart. It's stalling with a reversal candle on the daily chart. Pulled back in between the two moving averages. Maybe we'll give a new buy signal next week. Overall, the pattern I like here with the price and where it is in relation to the cloud. Let's see, gold. Oh yeah, and gold. Let's just look at gold. Here's this bullish flag that the bull flag pattern that I talked about in the past. It's still materializing. It still hasn't broken through. So today was not the right day. The markets were up, and when the markets are up, usually gold drops a little bit. So if we have a down day next week, that's what I'd be watching. I'd be looking at gold to see if it can break through that trend line. It's been respected multiple times, as you can see here. So there's the initiating candle. There's a second candle that creates the line. Here it came back to that level and stalled again, and then dropped some more. So, but it's holding above the Ichimoku cloud. Price is above the Kijun-sen. So I think that's why I'm thinking that we may see a breakout next week. let's watch and see. All right, guys, that's going to do it for this video. If you want to find out about how to become a member, stick around. Basically, what you want to do is just come here to my homepage, Blue Cloud Trading. And if you haven't subscribed yet, click that subscribe button. It really costs nothing. It's free to do that. Hit the notification bell. Maybe share this video with someone. And this is what you do. Just click on that join button and select Blue Cloud Trader or any of these levels here. Blue Cloud Supporter, you're still supporting this channel. I appreciate all the members. Blue Cloud Trader, you'll have access to those exclusive member-only videos like the one I'll be posting tomorrow. And then, of course, the Blue Cloud Legend level membership. This is the one where you get that member-only video. You can request stocks on an ETFs be analyzed on the show. Day trading videos are found. You can find those in there that I've recorded, as well as the daily trade updates that I post under. I'll show you guys where you can access that. So, right, once you're here, a new tab will pop up once you join. You'll see it as membership. So it'll look like this. All right. And then that's where you click on to find those daily updates. And that's going to do it. Hope you all have a great weekend. I will catch you all in the next video.